Payoneer. Let's put it through its paces.
July 2023. A user's Payoneer account is blocked. Over 4,000 inaccessible. On the same day, their business partner's Payoneer account is also blocked. 11,000 more. 2 accounts, same day, combined 15,000 frozen with no explanation and no definitive recovery documented. The closures appeared automated. That is not the worst case. September 2023. 10,000 frozen on a review platform. The duration before any resolution was described as 2 years. 2 years is the longest hold documented across any platform this channel has covered. February 2024, 24,000 held. Money also debited from the account while it was frozen. The community's summary of Payoneer in 2026 is not a recommendation. It is a conditional instruction. Use it when the marketplace requires it, not before, not as your primary account, and withdraw your money the moment it arrives. Payoneer was founded in 2005 by Yuval Tal with a mission to democratize access to global commerce. The founding problem was specific. Businesses and individuals in emerging markets had no efficient way to receive international payments. Banks were slow and expensive, wire transfers required extensive paperwork and days of processing. The solution Payoneer built was receiving accounts, local bank details in major currencies that allowed a seller in one country to receive payment from a client in another as if it were a domestic transfer, avoiding the international wire fees and delays entirely. That receiving account model is the reason Payoneer's strongest user bases are in markets where banking infrastructure is limited. Pakistan, Bangladesh, India, the Philippines, Egypt, Brazil. For a freelancer in these markets receiving payment from a global marketplace, Payoneer is often the most practical option available, which makes the account freeze pattern documented in community complaints qualitatively different from what PayPal or Stripe produce. When Payoneer freezes an account in a market with limited banking alternatives, the consequence is not to use another tool. It may be to miss rent. The company went public in June 2021 through a merger with a special purpose acquisition vehicle, listing on the stock exchange as a publicly traded company at a valuation of approximately $3.3 billion. John Caplan became sole chief executive in March 2023 after the previous leader transitioned to an advisory role. Revenue in fiscal 2025 reached approximately $1.05 billion, with revenue excluding interest income growing 14% to over $820 million. The marketplace integration is the reason Payoneer survives its own reputation. The platform is natively built into the payout infrastructure of over 2,000 marketplaces and platforms. Freelancing platforms, online retail marketplaces, accommodation platforms, image licensing services. When a freelancer signs up to one of the major freelancing platforms and selects a withdrawal method, Payoneer is there as a native option. The freelancer does not choose Payoneer because it is cheaper than alternatives. They choose it because the marketplace already integrated it, and the alternative would be receiving funds through a bank wire that costs more and takes longer. However, the product has expanded beyond payout processing into territory that creates genuine retention. Capital Advance offers working capital financing based on historical payment volume, with limits reaching up to $750,000 for eligible sellers on commercial marketplaces. A seller receiving $50,000 monthly through Payoneer can access working capital to fund inventory without approaching a traditional bank that may not understand their business model. Transfers between Payoneer accounts are free, which makes the platform useful for businesses paying contractors who also use the service. Receiving accounts are available in multiple major currencies, and a debit card allows spending from the balance directly. The fee structure is where the comparison to Wise becomes uncomfortable. Receiving fees reach up to 1% on incoming funds. Currency conversion costs range from 0.5% to 3.5% depending on the corridor, and the rate is not the mid-market rate that Wise uses. An annual fee of just under $30 applies to accounts that receive less than $6,000 in a 12-month period. For regular high-volume marketplace sellers, the convenience of native integration may outweigh the cost. For freelancers who transfer smaller amounts less frequently, the fees and the annual charge compound into a meaningful cost that alternatives do not impose. The account freeze pattern at Payoneer combines elements from every other platform in this comparison and adds problems none of them share. The dual account block in July 2023 demonstrated that Payoneer's risk systems can cascade. 2 linked accounts flagged on the same day, both frozen simultaneously, with a combined 15,000 inaccessible. For businesses that operate collaboratively through the same platform, a single flag can freeze the entire operation at once. The verification loop is the complaint category that distinguishes Payoneer from the rest of this comparison. Address verification documents rejected for months, with no explanation of what was wrong or how to fix it. An account locked after the user added a new bank account. Company formation documents submitted and still not approved, requiring escalation to senior support to make progress. The pattern is not a single rejection followed by resolution. It is repeated rejection of the same or different documents, with support providing automated responses that do not address what the user needs to do differently. For a user in a market where Payoneer is the primary route to receiving international income, a verification loop that runs for months is not an inconvenience. It is a livelihood problem. The annual fee adds a dimension that no other platform in this comparison imposes, just under $30 per year charged to accounts that receive less than $6,000 in a 12-month period. In isolation, the amount is small. In the context of a freelancer in an emerging market whose account is simultaneously locked by a verification system that will not approve their documents, the platform is charging a fee to an account the user cannot access because the platform's own processes have prevented them from using it. The community's assessment across freelancer and digital nomad forums is direct. Payoneer is described as the worst financial technology company in the world. The recommendation is to avoid it unless a marketplace requires it, and to withdraw funds immediately when they arrive. If the marketplace you work through integrates Payoneer natively, and the alternative withdrawal method is a bank wire that costs more and takes longer, Payoneer serves that function. The receiving account model solves a real problem for freelancers and sellers in markets where international banking infrastructure is limited or expensive. The Capital Advance product creates genuine value for marketplace sellers who need working capital and cannot access it through traditional banking. The free transfers between accounts on the platform are useful for businesses paying contractors who also use the service. The caveat is that every other function Payoneer provides is available from alternatives that do it with less friction, lower fees, and fewer documented failures. Wise offers transparent mid-market pricing that is cheaper on almost every corridor. PayPal offers consumer checkout trust that Payoneer does not possess. Stripe offers developer infrastructure that Payoneer does not attempt. What Payoneer offers that none of them match is the depth of marketplace integration. 2,000 platforms with native payout connections. That integration is the product. Everything else is the cost of accessing it. Use Payoneer when the marketplace requires it. Withdraw to a bank account as soon as funds clear. Do not keep a meaningful balance on the platform. Do not rely on support to resolve verification problems quickly or clearly. Keep records of every document you submit because the verification system may ask for the same documentation repeatedly. And understand that the annual fee applies whether or not the platform's own processes have allowed you to use the account during the year it covers. Payoneer democratized access to global commerce for freelancers in markets that needed it. It has not yet built the operational infrastructure to treat those freelancers as well as its mission statement promises. The access is real, the reliability is conditional, and the community that depends on Payoneer most is the community that trusts it least.